I mean, as expected, very slow news flow today. We have the 3-day weekend. The market's closed tomorrow with Good Friday. Um, but we do have potential for the market to kind of test yesterday's range. I mean, I think some people struggled a little bit yesterday, but if you just stuck with a day of rest after some big moves, we'll support kind of where we've supported the last few days. We'll resist in the 262 area where we know kind of cracked from the day before. We were fine. So that's how I looked at it. Shorted in this pop into 262 here. And long, I can't actually remember if I got long in the morning at 259. Maybe I just covered my short into this. So,
Marchex, MCHX, Eden.
So today, it's possible we could just actually get that drop down in volatility I mentioned yesterday in terms of, for the market to actually move up to higher prices, we're going to have to see a compression of these moves. And yesterday, what was our range yesterday? 3.5. It was almost, about 1.5% or so. Things kind of got tighter today. What would that look like? Maybe this would be the resistance. Maybe the support would step up a little bit to maybe here, back below 260. Maybe right on the open, we get one of those. But again, if we move outside of this, especially to the upside, if we start to consolidate up here and then break to the upside, it could be a straight shot to 264, 264.80. So on the downside, there's kind of a lot going on here. You have the low from the other day, which is around the 200-day probably, and that's just below yesterday's low. So it's a little bit trickier. So I would say if we go hard through 260, meaning coming into the low 59s, and unlike yesterday when we went to 59 3 different times, if we don't immediately get back above 260, we do something like this and start to kind of hold here. Then you can think about the downside move, but you have to be cognizant of this 200-day moving average right below. And if that gets taken out, that's a different story. There's it could be $2 or $3 of error below that. IWM. So we didn't really do much on IWM other than in the morning it tried to break below 50 and tried to hold, but reverse back up. You can see, look at the wicks here. This is pretty clear. 150, 120. So if you were paying attention to this one on the open and you saw that it was sold and you shorted the midday move into there, that worked for, you got $1 out of it, and you got to test again. Then one final test at the end of the day before testing the morning support. So 149.70 by 150, 120. This is a little bit more negative price action than the prior to it. Just the fact that couldn't really muster the strength to get back up to 152. To compare that to like the SPYs, yeah, I guess it's pretty comparable. IWM have been showing some relative strength. Then on the Q side, obviously this is a much more concentrated index dominated by Amazon and Apple and Google and Facebook. If you look at that, I'll just show you on the daily what's going on here. So if you look at the Qs on the daily, you just had this, let's even go back further. So you had this really just slow, think about how volatile normally technology stocks are. This really, this was a little bit of a down move here from 143 to 136. It's still only a 5% pullback. I mean, very volatile sector historically. But once this trend, we've done this so many times on these, and the trend started to accelerate here and then got steep, that broke that steep one, came back in towards the longer term trend, which I didn't extend the line, but it's towards the longer term. And you get this wide range, and you could be getting this for a while after such a big move. Topped out here. This is the top of the market. Actually made a new high after the market had topped out, the broader market. So we could be looking at this for the rest of the year, just digesting. The idea is that just after such huge gains over the prior couple of years, could get some more sideways action for an extended period of time. Now, when we zoomed it back in, here's the February low. It's like 156, 156.5 is support now. It's tricky because you have news flow in these different names, right? On the Facebook side, you just got security issues, the delete Facebook campaign. Amazon, you got Trump tweeting, which, Amazon's up like probably 70% since Trump was elected. So they've done pretty well. And we know historically when he first, I don't know if it was after he was elected, when he started tweeting about different companies and they'd go down, and then people realized that usually it would probably be good for them if you tweeted about them and it went down. And if you just track those numbers, somebody had done it, those stocks generally do pretty well after he tweets something negative. Probably because he's just trying to induce them to do some sort of deal. But so keep an eye on this area. Right? I mean, you can just see the spikes yesterday, 158.60. If you see get to 159, let's say, start holding above 158.60, then you could look for the break to the upside and kind of a retest of 160 or so. I wouldn't get too bullish on the Qs until it, until they could actually close up here a couple of times and maybe then get a close above 162. All right, GME. So GME, our firm is actually pretty net short this, so that's definitely going to change the way. Not that there isn't some short opportunity on this one. Over the years, you probably heard me talk about it. I didn't understand how the stock was a $40, $50 stock for years. It just seems like I don't understand how the business model would work. Not that I know much about gaming. It just seemed like having a physical store where you have to pay all those expenses and sell games in this day and age would not work. The market finally caught on, I guess, at the end of 2015. It gapped to 40, went straight down to 25, and since then has been in this downtrend. It hasn't been at these levels in many, many years. I was thinking maybe if on the open it could pop up into this area here, this would be a nice short entry. You always wonder though, it is down. It's down about 70% from $50, actually more than that, 75%. It's about 75% from was $50 a few years ago. So even off from 30, it's down 60%. Anyway, the point is when something's this beaten down and they're still making money, which just glancing at the earnings, they are. I mean, they got it down 7%, but they're still making money. You get some bottom fishers. Let's go to like a 30-minute. The tricky part for me is if it does show it's bottoming and I get long, it's just a little bit more difficult for me to exit because of the firm being net short. So it's tricky. But you shouldn't have to deal with that restriction. So the highest it's been recently, I guess the last, I don't know if they warned you or what this was, but it was $20. So it's down, even from there, it's down about 35% from the January high. I'm just trying to buy it. So it's traded about 1 million shares. Clearly it was being bought here in front of 12.5. Had trouble 1280. The buyer stepped up. It's holding higher. So yes, it's still in a pre-market downtrend, but buyers have stepped up twice now. So if you get something like this, you might get that for 13. Like that. Now after that, this doesn't necessarily have to lead to it being a bigger picture bounce. It could just fail here, come back down, fail, start to hold below 13, and you'll get a close at the low situation. But the fact that people are bottom fishing here, I don't know exactly what the short interest is. I don't know. I would imagine it's pretty high. And so people might just want to cover. I think it's not going out of business. I'm just going to use today to cover. So that is that. Overstock, OSTK, we looked at this a couple of days ago on the secondary. Now people are saying they might not do the secondary. I didn't have alerts down here at 35, 36, or I would have given it a shot there for a move back up to kind of where it almost is now, for a move back up to 39.5, 40. So let's see on the open if it fails here. This would be the first potential resistance area. Wouldn't be unusual for it to fail here, then get a retest of something like 38. And if it does dip into 38 and it's being bought there, I mean, personally, it's a little messy stock. So what did I put on this? Put 37.50. I'd be a little bit more comfortable if it flushed through here and looked for a bounce from this area here. A little bit better risk reward too from here to here. Either one of these it seems particularly good, but I guess we'll see how they trade. Both being plays. Lulu, on the other hand, number one idea yesterday was great. Let's just zoom in and take a look. So we had the strong numbers. It had the big pullback in the after hours to 82, but it held. I think we had 83 as our first support on the game plan sheet yesterday. It held that, right? Flushed to it and held it. And then once it got back above 84, it took out the pre-market high, went up another $2. And then they were accumulating it most of the afternoon at 86.50. End of the day, they gave up. It did triple top here at 87.75 or so. So this is an all-time high up here. Some people come in and take profits today. Maybe it flushes down to 85 on the open and worked its way back inside yesterday's consolidation range. It's getting pricey up here. Sometimes in these situations where something makes a new all-time high and it's been really strong after earnings, it'll consolidate in like a $2 to $4 range for like 3 to 5 days after earnings, and then you'll get another break from that consolidation. Yeah, I mean, people were smart. I mean, 35% short float in GME, so people have been riding that down for a while. So that could be enough to get this thing to have a real bounce. We'll know about the strength. If it has strength over 13 for the first 30 minutes or so, that'll be the tell, as opposed to just spiking above 13 and failing. Restoration Hardware. I certainly thought the move to the mid-90s on the open was much stronger than I would have imagined. If you ask me, just looking at the mixed numbers, again, it's a bit of a crazy stock. So now that we have information on it, it failed here at the resistance. You can see this pretty clearly on the daily. It topped out above 100. It was sold here, came off, came back up, was sold again, was sold again. So this could settle down between 90 and 95 now, probably. Kind of like it did here for a while, and then dipped here for a week. So let's zoom in. So put in its high right in the open. Just a wicked pullback. I didn't even realize it pulled back. I missed this. The 90 was shorting at the long-term resistance. It pulled back $6. Then once it got back above 90, if you thought, hey, this is a strong opening drive and you wanted to give it a shot, the hold of $90 was kind of, that's the entry where you can risk about $1 to see if it retests the high. It did almost come down there again, didn't quite. Almost came down there again. So, I mean, people are definitely, the reason why it's stopping right above 90 is people are like, this is strong. I'm going to buy it into 90. And people start buying, 91, 90, 70, 90. And so that's why you kind of see it stop right there. Wouldn't surprise me again if they spiked it up to 94.5, 95. It seems like a tough area though for it to hold above. I think it's more of a fade up there. And yes, I would trade the IPO. This is the Chinese internet. So the way to trade that is, what's the IPO price? Does anyone know? I haven't looked yet. But basically, you just want to make sure it opens a significant amount above the IPO price. And you'll see right when it first opens, let's just compare it to Dropbox. So Dropbox opened right at 29. So usually the way that we'll do it is if it opens above the whole number, you'll get long right above the whole number. And then some people will put a stop right below it because it could drop out dollars. Some people will put a stop below, below 28.50 or 28. But you have to know exactly when you get in right on when it releases where your stop is. The most common thing on the desk is right below the whole number. And if it drops and you hit out and it gets above the whole number, you can buy it back. In this case, it isn't that great. It was pretty good. It went up, actually went up about $2.50, and then I think since we had access to shorting it, once it failed here at 31.50 a few times, and then had this hard down move, then we stepped in and started shorting it into the retracement. I think that potentially this could be a much hotter IPO than DBX. So, but you'll see guys on the desk. You'll see Shark and Swang, and if I'm on the desk at the time, I would be looking to be long it. And that's it. But I mean, obviously, if you're not an experienced trader, trading an IPO tend to move very quickly and have a lot of wicks like this here. But certainly if you get a tight consolidation, like something like this, where you can define your risk at 20, 30 cents, that's a spot for you to get involved in. So maybe if you're not experienced, if you're asking me about how to trade an IPO and you haven't done that before, right when it opens, maybe give it about 15, 20 minutes to settle in for making your first trade.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.